got an 11 basis point increase in that 10-year yield, 13 basis points on the longer end of the curve. It is proving to be very problematic for equity investors.
Yeah, I woke up this morning, Julie, early, as I know you do, and it seemed kind of relatively calm, cool, and collected. I even saw some green on the screen. And then, though, another trading day, another day of surging yields. The JOLTS data we got, I think, playing some role there, but another day of these yields popping and stocks dropping. And I think, in part, it's just the speed of the sell-off in the bond market that people are reacting to.
Yeah, the speed here on top of what has already been a monster move in treasuries, right? You sort of had that move to 4.5%, and then things kind of went sideways for a while. And now another big move coming on the back of that. The latest data that we got was the JOLTS report, right? The job openings survey that came out earlier today. The number of open positions rising to 9.61 million. That was higher than estimated. So what does this imply? Well, it implies that maybe the Fed is still going to have to make more moves to get the job market and therefore inflation under control. So if you look at the CME Fed Watch tool today and Fed Funds futures and what they're implying, the odds are going up that indeed the Fed is going to have to raise rates another time at its November meeting. And that move, that increase, really happening over the course of the day as people are watching those bond yields.
Yeah, another reason for the sell-off that I thought was interesting was Ed Yardeni, very well-known economist and strategist. When he speaks, people tend to listen. And he was saying that he thinks what's motivating and moving the bond market now could be changing. He wrote to his clients this morning, the worry is that the escalating federal budget deficit will create more supply of bonds than demand can meet. So he's saying the focus of the bond market could be kind of changing here from, let's say, central bankers to more fiscal policymakers.
Yeah, I mean, and just to get a little wonky for a minute, there is increasing attention now on the weekly bond auctions and whether there is demand for those treasuries, to your point. Will there be demand sopping up all of that supply that's out there? That's something that the markets are watching very closely here to see where yields are going to be going.
Right, those are going to require perhaps higher yields just to clear that market.